OPEC Plus says in a statement that efforts have been evident in supporting the global economy to overcome challenges over the past years and have ensured market stability.
Alright, sorry guys, just give me a sec. Trying to get everything set up. Okay. How's sound? You good? I don't have YouTube chat again. I don't know what's going on with that. Yeah. I did brunch the next day. Not a big drinker. Alright, financial cloud. I'm trying to get YouTube set up here, guys. Give me a sec. Okay, cool. So quite the sell. Back down to our like balanced lows here. I need to see if this will hold. But nice little sell-off ever since the new year, huh? They cooked the books, pushed us to all-time highs, and then said never mind. Interesting. So we gotta see what happens as we come down here. We've got some structure repair left. It'll be interesting to see if we need the full repair down into this. Or if we continue to find buyers here. Right? Down in value low. And I turn this music down, Jesus. Yeah, so let's actually just clear this and get some base stuff down. We'd really want to see this area continue to show as buyer demand. Because if this low breaks, we have no structure below us. Which is never a good sign if you're bullish. Because usually we'll go for the repair. So what you want to see happen if you want us to stay up here and not fill this gap is a break out of value here, and then the ability to get back in, right, and then oscillate the node. And then we can go for a decision after that point. Right? Because we're basically testing value low right now. So we need to see buyers step in this area either where we are now or a bit further a bit further down, and basically just reclaim value low of this node. So we could mark this kind of as like our edge low, and this is our edge high. I'm going to actually do that. So we can call this edge low, HVE, high volume edge, right? Actually, let me just HVE low. It's probably a better way to put it. Then let's do HVE high. It's gonna drive me nuts if these aren't like the same length. Okay, so you caught this low that we basically need to recover, and we need to be able to hold that and push back into it for a full oscillation up, with our mid of this node basically being your first area of playing like, oh, are sellers in control here? Are we going to be risking off? What's going to happen as we come down into this? So I'm just going to mark this area where we are going to meet our first major resistance if we do come back up. I just want to be ready for that area. We're going to mark that in blue. It's kind of like where the POC is. And I'm just doing this based off of where our previous developing POCs have kind of like congregated the most, right? And then I'm making zones based off of where these areas are. This is like a reference point, you know, of like areas of contention where we're going to have to get back over these areas if we want to reclaim, right? These are previous buys that have now turned into people who are offsides. So the areas I just want to be paying attention to. But again, we need to see that push down into this first to let us know if buyers are still relevant, right? Are they still willing to buy in this area? And if so, then we have some areas to look for on the upside. But until then, we're just kind of in a free fall right now, back down into this demand. And we're going to need to see if this can hold, or do we need to fully repair this structure back down to this this edge below? I do not have the answer for you as of yet. But these are kind of like the structural levels that I'll be watching just based off of our node. Right? Nothing crazy. Just where previous people were participating, and areas that we're going to need to show as supportive if we believe that we're ever going to be able to push higher. So now we can go to like a smaller time frame and see what's going on here. I'm just gonna write full structure repair level. On this one. So that's really all that matters. We had a bit of a basing before here, so I'm just going to mark this. $52, $86.
At 10 a.m.
Okay.
Eastern Time, we get US ISM manufacturing PMI forecast 47.
Yeah, I think this is really it. I don't really have much to say until we come down and test those.
45. US JOLTS job openings forecast 8.821 million on the prior 8.733 million, with a range of 9.02 million to 8.188 million. US ISM manufacturing prices paid forecast 49.5 on the prior 49.9. Employment index forecast 46.5 on the prior 45.8, and new orders index forecast 49.1 on the prior 48.3.
Yeah, so I need to see us either recover our previous like selling levels or come down and test previous demand. It's kind of an awkward position right now because we know a seller is in control, and this can just be a basing for continuation. There are some signs of relief early on right now with deltas kind of flattening out, which is a good thing. But we need to be watching as like the Russell comes into this VWAP in developing POC, where we can basically call this our seller here. Seller POC. And so until we see that recovered, I don't really want to say that the bottom's in yet. Just because this is a bit of a relief, and we're so close to an area of the previous low. So either we reclaim, right, and then build off of that, or we wait for price to get down to that magnet. And like until we see reclaims of like VWAPs and our ADRs, stuff like that, it's hard for you to want to long below VWAP off of multiple rejections beforehand, right? Like it doesn't really make much sense. So what you're going to want to see if you want like a bull continuation is this kind of thing, where we start to see acceptance above where the seller is currently positioning themselves. We can see that they're positioning themselves here, right? Over and over and over again. So this is an area that we're going to want to watch on the DOM once we get back up and retest. If we do get a look above, and we want to see that this guy's gone, basically, right? He's the, like, let me full screen this. You can see that this level is showing quite a bit of significance as resistance, right? And so if we're going to break out of this current auction we're in, or this current distribution that we're trading in, right, which is this, we need to see this become supportive instead of seller value, which is what it is currently in this, if you're viewing it as a distribution, right? We've got buyer value here, and we have seller value above, just like to put it simply, and that creates a range, right? And so we need to see where this seller is become support. It's really that simple. So on a look above, we just watch to see if the bid steps in and defends that level, and if that seller is no longer there. If that seller is no longer there, then we can think, oh, okay, we have a shift where buyers are now willing to buy and defend what used to be the high, right? So if they're now willing to buy here and defend this, we should be looking for where sellers previously were above that area. And that's just a shift of value. And that's how we'll gauge our next area. It really doesn't have to be more complicated than that. And so until we see that, we should be respecting this is our high and this is our low. until we see either acceptance below, right, or acceptance above.
At 10 a.m. Eastern Time, we get US
Crazy.
ISM manufacturing PMI forecast 47.1 on the prior 46.7, with a range of 48.1 to 45. US JOLTS job openings forecast 8.821 million on the prior 8.7.
Does that make sense?
Million.
Are we
Range of
following my
9.02 million to
my train of thought?
8 million. US ISM manufacturing prices paid forecast 49.5 on the prior 49.9. Employment index forecast 46.
Yeah, nothing fancy, right?
Prior 45.8.
But it just
And
gives
the
us
orders index
an idea of like, oh, okay, well, if we've identified this as our seller and this is our buyer, then like, no shit, we shouldn't be taking a trade here. Unless you have like a very tight risk plan where you're looking for that buyer to hold higher lows, and then you know where to cut, because if we don't hold the higher lows, then we're probably going to traverse back down to the lows. So you either want to see buyers be able to maintain the mid, right, which is what we're testing now, of this range, or we wait for a price to come back down to the lows and we watch to see how people react. But where's our probability of us having the best chance for a long or for a short? Well, at the edges. So we've got ES now coming down into our potential demand. Let me get off this full screen. Morning, Sauce. Let's see what happens as we come down into this. 47.55, where you've got your 15-minute FPG. It's like your only like little minimal sign of potential life, where we've seen potential, we've seen previous lows down here, which is why we haven't marked this potential demand, or we can see at least a test of a low where people have found value previously. I don't have a ton of confidence in this holding, just with how this sell has kind of been reacting, and with being the new year, and now us kind of just selling off after a huge run up with no structure below us. So if this does hold, you know, we want to be very respectful of these previous levels, and like the retest back into structure if we do find a bounce here. Like I really need to see a buyer show their hand aggressively, or I think that like a structure repair down to that level we were talking about just makes sense. So we can play some scalps if this does hold here, but I think that you're more than likely probably coming down into this like 26 or this 700 area. And the 700 area would be a full repair. So we've got quite a bit of room to the downside if we don't find buyers here into this 55, 53. I think the 62 is really important though, for a recovery. So if we do see buyers step in, we need to see buyers step in this area, recover ORL, right, and then pop above this 62 and then show this as supportive for upside. This is going to be very important to gauge if this is going to have legs on it or not, right? Because remember, we've marked this as HVE low, right? So this is the low of what we were considering value off of that node. So if we come back up to try to get back into that previous auction and we reject, that's a really great sign that something is shifted, right? There's been a shift in what value is currently being like seen at. And so like with that shift of value, if we're now rejecting where buyers previously were, and that's now where sellers are, we should be fully expecting for a push all the way back down to where buyers previously found value, which is way down here to fill the structure.
47.4, 47.4 higher than forecast, 47.
So we really want to see this area hold if you're bullish.
8.79 million, 8.79 million, lower than forecast.
And watch what happens at the 62 level.
ISM manufacturing prices paid 45.2, 45.2, lower than forecast, 49.5.
And again, this seller POC on RTY.
ISM manufacturing new orders.
So let's see.
47.1, 47.1, lower than forecast, 49.1. ISM manufacturing employment index.
So on this retest, we want to now see buyers hold this 62 area.
46.5. Seeing prior revised for JOLTS job openings, 8.852 million, 8.852 million.
We can see our seller value area now holding still, right? Top and bottom of the range. So we need to see a push above this, and then this to hold for a breakout, or this will continue to show as our hold. Need to see the rustle over the seller POC, and we need to see buyers now willing to try to hold this 62 area if you want to see any sort of upside move that isn't just where we're currently trading.
So the Dixie pairs gains after US manufacturing data last up 0.2% at 102.45. We have posted the US ISM manufacturing PMI December report on the feed for all those interested.
Okay, so now we're seeing some digestion after the squeeze candle. See if we can hold the higher low, if we need to come all the way back down, and then what happens from there.
To this release, new orders and backlogs are contracting, production is expanding, employment is contracting, supply deliveries are faster, raw materials inventories contracting, customers' inventories are too low, and prices are decreasing, exports and imports are contracting. The US dollar cuts gains versus the yen after US data, still up 0.8% at 143.02 yen. And oil futures extend gains, Brent and US crude up by $2 a barrel. And we have posted the US job openings and labor turnover November report on the feed for all those interested. And the US seeks up to 3 million barrels of crude for this strategic petroleum reserve for delivery in April.
If you're in at this 62 rebid, this push above and then hold, you need to sell into VWAP until it becomes supportive. So until we see a push above this and then 67s kind of hold the support on a test, this is just kind of where we've seen this guy positioned, right? There's nothing really here until we see a push above. So just keep that in mind. Just going to mark this as like this. We want to see price build at this higher low, right? See if we can now hold this HVE low at 62s. Great job, Kolsky. So your first risk off again is in this like 67, 68. And then we want to see buyers then step in there and show that is supportive now that we're seeing higher lows being put in. Hopefully I like walked through that area well enough for that to make sense. Yeah, no problem. And we've marked out the areas on NQ and RTY as well, which we're now testing. As soon as we see those become supportive, then you'll know that there's room, right? Until then, like, this is just your risk off. Until we see this area, all of these show that buyers are wanting to buy here and not just sellers reload. So we leave runners, and then we look to see if we can get more. Once we see the look above and then the ability to hold, we can then add to a position. And then again, if you just are like hopping in, we need to see the Russell make this supportive. This is where our seller POC was positioned, our sellers were positioning before this push down. So we need to see that show as supportive for a push up, and then we can retest, you know, the 2020 level. Until then, like, we just risk off into VWAP because we're below it, and we risk off into this POC, and we risk off into this known seller, where we've seen them, you know, push the market down multiple times now. And until that becomes supportive, it is the top. Imagine. Morning, Ty. Retest of our 62s. Yeah, man. To you as well. Surely everything will change. I'm not really trying to like bash anyone here, but if like a new year is what you need to make the changes in your life, like you've already set an arbitrary like start date instead of just doing it. You know, it's not a good look. Morning, Varg.
Fed Sparkin says a March rate call is pretty long way away. So Fed Sparkin is now participating in the Q&A with reporters.
I'm so excited for Rory to realize that he doesn't have any materials and that he needs them for the Hellmonth. Like I probably went through more materials on sacrificing them, just throwing them out for this thing, than he's gotten so far playing the game.
Sparkin says, I question whether consumer demand will stay vibrant.
Yeah, it's a grind, man. You have to do these ARB farms with me, Varg. Actually free. Free, man. That's one run. All right, so coming back down to the lows, this is our test, right? This is what we were talking about. Are buyers still present? Or do we find acceptance now at the lows, right? Just like we failed to find buyer acceptance at the highs, are sellers that much in control that they've now pushed buyers out of the way and we've now shifted, right? This is the test. Is this still buyer value? And are we looking for, on a pushback up, do we see this area hold? And they show that they want to continue to hold this? Or do we see this as a rejection point and we see sellers showing acceptance for a push further down, right? This is that test. This is why we mark these areas out and we talk about them and where we're expecting areas to find people and what their reactions are in these areas. It's super important to give you a sense of where you should be looking to trade directionally. Yeah, I think longing here is a bit awkward. It doesn't really make sense. You need to see a higher low be put in first, or you're just kind of like rolling the dice. Like, I have no problem trying to buy, you know, the edges of an auction, but like, look at the reaction we just saw. It was like a complete and total failure from buy side to defend, and then just a push down, and then like you need to see a higher low. We need to see buyers show their hand. As of yet, they have not, and they've shown like a pretty weak bid. What are you gonna do with that? Like, who are you playing with here, other than just like a line on your chart? Who's like the actual person that you're attempting to go long with? Because your one lot isn't it's going to push the market up. So if you don't see a person with actual size care about the area, then you have no business being here. You always have to remind yourself of that. Am I speaking about your FEG? No, I didn't even read your comment until right now. But a 2-hour FEG sounds meaningless to me. No offense. It's like such a large area. What do you do with that information? Like, are you using a 2-hour zone for a longer term position, or are you using a 2-hour zone for your 15-second trade? And how do you think that applies in the grand scheme of things? So like a 2-hour FEG isn't a liquidity zone. That's a lack of liquidity. That's a gap, right? That's a structure repair that needs to happen. Whereas with a smaller time frame one, we can look at that as an area where the spread was pushed aggressively and price wasn't able to be filled. But a 2-hour one, right, is a gap. That's a different thing. It's a liquidity void, whereas an FEG is a buyer pushing the spread up, right? There's a very big difference between a liquidity void and buyers aggressively pushing price and them not being able to get filled. That's why like the higher time frame areas are like a good reference point for structure repair, I think. And it's like, okay, we either hold the edge, right, the high of it, or we're going to probably repair down to the low and fix that structure. But like the lower time frame ones, we can use in a very different way, where you can even visualize it. I'll let this guy talk.
70 out of 100 equaling greed. And taking a look at the VIX volatility index, currently up 6.36% at 14.05.
So like we can look at it, we have like on a 2-hour, when we see like a large gap up, we don't have like a lot of information here. We just have this huge zone where we have a node that's built out here and a node that's built out here. And so like, what do you do with that information on a smaller time frame? Because we don't know the granularity of like what actually happened in that large amount of time. Is it just a gap up because of the days off in the market? Is it a gap up off of news? We don't know what happened to cause such a huge rift, and so it's a liquidity void because there's no don't mind this. We're just looking at this as a liquidity void, and so like we either want to be looking to see if we structurally repair down to fill this, but like on a smaller time frame, it's really important to think of like on a footprint chart, what's actually happening that creates an FEG like that? Well, we have a buyer or a seller who's basically taken, where's the shitty DOM? Is this it? Did they get rid of it in TradingView? Interesting. Okay, so like basically what's happening is that there's only so much being offered on the other side, right? We have a spread where we have, you know, 20 on one side and we have 5 on the other. If we need to fill this guy and there's only 5 here, we're going to go up and fill, right? Or we're going to go down and fill, whoever, vice versa. Like, we can't just buy at that price. So if he markets in, he's buying at the best available price. So if there's 5, 20, 30 contracts at different price levels, then he's sweeping the book, is what it's called, and taking all available orders at all price points to get filled on that order. Because he's not putting on a limit, he's putting a buy for a certain amount of size and it needs to get filled. And that causes an aggressive candle up or an aggressive candle down, because he's just swept the book and pushed price. So that creates an imbalance in price. And then when we come back down into it, we expect that to be filled, but to still be in the direction of that original person who's pushed price up. That's kind of the idea. But when you have such a large time frame buyer, like, there's no information there to guarantee to accurately play off of. But on a smaller time frame, you have a very clear understanding of when you're wrong. It's a much smaller area of risk. So that's why that it's just something to think about. I don't think there's anything wrong with your logic, but it's just like, remember why we care about a certain area, right? Like, structurally, I think you have a good idea of a 2-hour zone, right? That liquidity void, the LVN that's there. But like, to expect buyers there doesn't make sense from a short-term perspective, other than like a hold of the current auction and then no need to like go back down and retest that area. That's why I was like, what's your time frame? Because if you're like betting that on like a 15-second chart or a minute or a 5-minute that area matters, it's like, okay, well, why? Like, it doesn't look the same. That area won't look the same as a FEG on the 5-minute on a footprint, right? As your 2-hour FEG on a 2-hour chart. Those are going to look very different liquidity wise, because two different things drastically, like, it's a very drastic difference in what actually happened to create the areas. Remember, like, why we care about the area. That's the most important part. Like, if you're going to ever build the narrative, you have to understand like why we care about the narrative that we're going with, and why, like, the initial reasoning behind it. Like, was there a buyer there that pushed the market up? Should we expect buyers who are unable to get filled because of the aggressive sweep to now try to have limits there, resting? Because that's what an FEG is. So if we're going with that logic, like, where in the 2-hour window do we expect buyers to have resting liquidity? It's too large. $2,000. Yeah, you just don't know. So that all of a sudden you don't have like a window of where you're wrong, or where you're going to cut, or where you're going to add your initial size. It doesn't make sense. This isn't looking great for buyers so far. We need to see a push and hold above. So far, we're just seeing lower highs, lower highs, lower highs, and acceptance where previous buyer demand was. You really need to see an aggressive bid here, step in, or it looks like we'll go for continuation down. Morning, man. So what we want to see here is a higher low being put in the recovery of a very short-term seller. So like we know that this is where buyers were previously. What we want to see is them now bid off of where the seller was and then show their hand that they want to hold this and a recover of these lows and a retest, right? Because if all of this is a liquidity grab, what we want to see is a failure for sellers to find acceptance here and a recovery of our previous buying level. So again, this is what I care about. This 84 to 90 area on NQ. I want to see this on a retest hold to show that this low has been put in, and then we can trade off of this buyer who showed their hand initially. Then we can play the higher low. If we fail to see buyers recover this area, right? This is now seller acceptance, and we look for continuation down. That's why this is so important, and we don't look for the initial bid in. We look for the recovery of a previous level of value, and then a show of force. Yeah, great job. Really need to see them get over this 57 and then make that supportive. Seller just sitting here. Why does this area matter? Again, why do we care? Well, we need to see if these buyers are now off sides, right? So we really need to see a recovery and then a bid off of this to show at support. So I'm gonna just like continue to highlight this. This is where sellers are going to try to hold. Here. These are areas that matter. Is this buyer now off sides? Is previous buying low now resistance? We need to see a recovery of this level and then a show of our hand, right, from buy side to defend this on a push above, or this is just sellers accepting, finding acceptance down here, which means that we have a shift in the auction and a push down.
So the UK had to sell £4 billion of 3.75% 2027 bonds on January 10th.
I just opened a random tab, man. I don't know if you really want this one, but yeah. I don't really have many levels. We just did like an overview doing them live this morning. But there's like really not much here until you get back over 62. Just with that being our POC and our what we marked as our high volume no edge low. So like until then, this just looks like seller acceptance down at the lows of previous value. And then it looks like we'll go for the full structure repair if we can't get back over 62. I don't know how long it'll take. I don't know if it's going to happen now or if we'll chop here for, you know, a day. I don't know. All I know is that we need to get back over 62s and show that as supportive. And like hold, or we're probably going to be coming down to fill this this gap. Sadly. I mean, it's not a bad thing, but like, you know, you kind of just want the market to go up forever. But structure repairs will be nice. It'll be good. It's healthy.
According to two engineers, a full shutdown of production at Libya's 300,000 barrel per day Sharara oil field is on the back of protests.
Well, that's not going to help. The levels that we care about today, Sauce, are this 12.6 on RTY. We need to see acceptance above that, or this is just where our seller is positioned. We can just say this as well, and this 2020. And then below, we know that we have this structure we can repair. I don't know where we end up down there. But I do know that until we can push above this, I'm going to continue to say that a seller is in control. Same thing for the NQ. We have this 91 and then this 609. So, I mean, it just looks bearish as of right now. And we're just waiting for either buyers to show their hand and basically trap sellers down at the lows, right? And then recover a previous buying level for longs. Or you try to short where buyers were previously and play with the seller to the downside for lower highs. Those are your options. Both of those have pretty clear invalidation levels, which is why we care about them for narratives. So we know if buyers can't hold the higher low, then we don't want to be in the trade. And we know if sellers defend where buyers were previously, that we're fine for continuation of lower highs. Like as long as those two narratives are like going, then you have a trade. So right now, like the short's the trade that makes sense. Because we didn't recover the levels that we cared about. We rejected off of them.
The euro falls to a fresh 2-week low versus the US dollar, last down 0.3% at $1.09.
Yeah, 43 is what I have marked the swell room.
Gorman says rates could go down this year, maybe a couple of times.
.43s, and then 38s, and then below that, 26s.
And Gorman says the economy is fine and a recession is unlikely. The Fed's done a good job.
Mm. This is just another one of those classics. Wait for RTY to stop selling off to know the bottom's in, and look for acceptance back above previous sellers. That's it. Or like it's just trend day down. Alright, we look for our first reactions into this 46-43 area, though. In my opinion, it'll look something like this. Create this, make this a blue zone. We'll either see buyers try to hold this area, or we'll look for something like this, or we'll look for acceptance below and then a push. Below 43 is down to 38 as your next moves. I mean, it can just hold the 46, I don't really care. But you're just basically looking for buyers to be found here near this blue box. I'm gonna look below into it, we look for the 43, and then look for a recovery of 46, and then a push up. We know that we have a seller here, short term, right, node, and a node here. I'm gonna delete this yellow because it's no longer necessary. Yeah, I'm just structure repairing on RTY. It's our first attempt at like a higher low in NQ. You guys see my post from this morning? May have been a little early for you guys. They fired the guy. Let me just repost this. They fired the regulator who tried to change gaming policies in China because of a sell-off. Your gotcha games are safe, Rory. Yeah, how dare he try to help the consumer? How dare he? They're like a major shareholder in a bunch of these companies. There's so much regulation in China. They've already tried to like stop the addiction with like League and all these other games. limiting the amount of hours. You have to like sign in with your actual like issued like ID, and it tracks your time. When I was in China, I had to use someone else's ID to play games in like internet cafes. Or I couldn't even log into League. I couldn't make an account in China. So like some of the students that we were staying with at the time, they would like let me use their ID to play games while I was there. There's the same thing for Korea, but it's not as serious. It just requires a phone number. China, though, it's like actual identification. So this is our first like real look at buyers attempting where previous sellers were. You see that recovery of the 49.50. RTY is still not convincing as of yet. I'd like to see it recover 98s. So far, just kind of like oscillating the lows. It's the same area on NQ that we were interested in before, which is this 82 to 91. I want to see that become support for me to really care, right? Because that would be a recovery of our Globex low. Need to zoom out a bit more so that you can see where we're hitting our head. Short time frame. You see all we're doing is filling this LVN from the seller here who pushed price down aggressively. So now we're coming up to retest this edge. So until we see this node recovered, right, we know that the seller's here and all we're doing is filling this structural imbalance. That's why I've got this marked. But yeah, I don't know how like anyone gets anything done anymore. So they like cut down time, like actual play time quite a bit, where you can actually be online. I don't really understand. I haven't been there in a while, but I know like the regulations have gotten way worse with online games and internet cafes, like the amount of like screen time you can actually have. I don't know how they get away with get around it.
Holding meetings today with exchanges to finalize comments on
What their reasoning was, there was too much time being spent doing the
ETF issuers.
too many cheaters, yeah. Surely.
Seeing upside in
Their actual logic was probably like, we're not having enough babies, and these kids aren't having babies because they're playing games, and they have too much, they have things, right? Like, it's probably one of those, actually. Like, they're too distracted. Get them out there and socialize. Don't allow them to be like otakus. Ooh. True, Cinch. Maybe you're onto something. I'm gonna clean up our levels. Let me do that quickly. Just off screen while we're waiting. There a retest of our sellers here at 57s, our seller on the Russell at our POC, and our seller at our NQ POC as well, right? So this is your first risk off if you did a long from the higher lows. This is where we want to see support build just as before, or this is the top of the range where we saw said sellers were previously. So you really need to see this area show on a look above that we want to hold, or this is just where we expect sellers to reload. Just keep that in mind. Yeah, they're very good. And it makes sense. It's like the most accurate display of where volume actually is in real time, right? Like, it's by far your best source of like a logical level. Yeah. I think if you were going to try to come up with logical levels, that this is probably levels, zones. These are probably the simplest to follow. Just like larger scheme of like our nodes. If you just wanted like less noise, just to kind of keep track where we need to see price push above and hold for upside, and where we need to see price find acceptance below for more downside. So dotted lines are kind of like short-term pivots, less importance, but levels to care about for potential bounces or rejections. Whereas our pivots are levels we want to see recovered and then show that they are willing to hold us there, right, on a rebid or a you know, a reoffer, depending. Like right now, I don't want to muck this chart up too much, but like, do you see that this is just our seller reoffer? Like, we need to see a push above this 57, right, and then hold that for a retest of this node above. But like, this isn't really like a level. This is just an imbalance fill. Like, we know a seller's here. We can see them being positioned here. But it's like the overall, we're looking for a recovery of this for upside. We need to see this node become supportive for a retest up to this. Until then, like, we know we're just going to continue to hit our heads here. I don't know if you guys want this. I'll probably just start working off of this chart if you guys are. Sharing is on. This might be easier to copy. But like, that's just like, so you have a clean chart with like zones there. There you go. I find sometimes that if you focus too small, right, like it's fine to trade off of these. Like, we have the areas marked that we care about, and we see like exactly what we needed to see, which is that bid off of where our seller was for push up, right? And like this stuff is good, but for like the larger picture, it's good to have just like a main zones, main areas we care about, and then we just watch price like traverse back up or down. That's really it. So like all NQ is done is come back up to our seller. So if we want anything higher, we need to see a push above this 10, or this will just continue to hold. And the Russell needs to recover view up, right? Just back up to the top of our range here on ES. So now, like, your risk is that this is the top, right? This is where our seller was. And so, like, if you're trying to add here, you're at quite the disadvantage if this is our current range, where this is our low and this is our high, and you're trying to add here. Your odds are more in your favor that we push down than we go up. But if what we can do is pop above and then show a hold where the seller was and make it supportive, then you can look to add, because then we have a very clear invalidation if we are wrong. If you try to add right now, and this is our current range, hopefully you can see the odds are very against you here. Like, you can still play this, right? We have a level to play off of, but you are waiting for a push above and then a hold, because you know if we push back below and then we see the offer step in here, that will more than likely head back down. So you can risk quite a bit here with the understanding that if we do push below and then we see a seller step in at a lower high, that this is probably going to rotate back down to the bottom. But like, if we're able to build, now you have a position at that shift of seller value to buyer value. And that's why it matters. Instead of buying at the edge before a test for a breakout play, you buy the breakout retest with a clear invalidation. They're very similar plays, but one actually has logic behind it. Another one is just like neuron activate, monkey, look for breakout without any sort of like understanding why. Hopefully that makes sense. Like, you see this, that we're like, oh, there's clearly a buyer, there's trend. And so all of a sudden in your head, you know, you do one of these, and you're like, oh, gotta press the buy button. We're at the top, and then it reverses. And like, this is, I don't want to say that you can't play off of this, right? Because we see a buyer here. But like, if you're going to try to buy this, then you have to, you have a very different trade plan for your invalidation, in my mind at least, where all of a sudden, like, I want to be playing off of this guy, right? So my entry's here, that I'm risking to this guy's low, and I'm looking for an upside to here, back to VWAP. And now I'm playing with this participant here, right? Whereas if I'm waiting for this, I can play off of this low and we're looking for the same area, where I'll know like pretty immediately if this is wrong, if we can't hold this, and I'm looking for a higher low here. So we're looking for a push above and then entry in. Or this is just a short, right? Because this is, again, like, your risk is that this is where our seller is located. This is where they have been located. And so trying to buy here before the push above and then a bid being seen on the DOM just makes you look like an idiot. Because you're buying at resistance, right? But like, you can still play this, but you have to know when to stop out. Because if you buy here and you're not averaging into a position, and then you hold and you continue to average down as price continues to fall down back down to the low of the range, and then you exit your position here and then we reverse back up, you're going to feel terrible.
Euro pound falls at 0.5% to 0.8628, a 2-week low.
Well, I mean, those are just like the two logical areas. Like, remember, who are you playing with, right? You need to continue to ask yourself that. Are you buying a level on your chart, or are you buying with a participant who's in the auction currently that you can see? Yeah. Yeah, so you're like looking to play with either this guy at the higher low, right? This is a recovery of our buying level. It's important. So you're playing with this guy, or you're playing on the loss of this seller, and then the buyer stepping in on the shift of value to the upside, right? Or you're shorting because this is where our seller is. And this is your first take profit, is this low here and then this low here, right? Like that's just logically. At the top of a range, you can either play with the seller to the downside, or you can wait for that seller to show that they're no longer interested here and buyers to step in and push. And like this is a great example of an area where you can have like a really tight stop tie, because you have a level where you can play off of. Like this is a 15-second chart, but we can play this in balance, because what does this balance represent actually from what we were just talking about earlier when we were talking about the difference between like a liquidity void and an imbalance in the spread? Yeah, right? So like this is someone who swept and pushed price before dramatically up, right, showing their hand. So we can play off of this level and have this as the area where we want to be watching for bids to step in, and you just risk off into this known seller above. And like if we can ever hold above this, then you can leave one of your runners, right, and then look to add to that position and average in on this retest, which will basically move your average from this low to probably the mid if you average up here from this position down in the low. So your risk is still pretty good, and you're looking for continuation. But the difference is understanding where liquidity is resting, giving you a much better fill and making the trade probability of like actual profit way higher. Because even if we don't break out, you make money. And like at worst, you're break even on your runner and your average up. I don't know. Please let me know if I'm like talking too much or if I'm confusing you guys. I don't want to do that. I know it's our first day back, so keep me grounded. Ooh. Well, that is the one benefit with these YouTube lives, that you actually can rewind in real time. And then you can play me back on 2 times speed to catch up. I wonder what I sound like on 2 times speed. Probably not great. I already probably sound crazy, just people who like don't understand what I'm talking about. Imagine it 2 times. Just ranting of a lunatic. I just like look at that like the Charlie meme with the poster. It's like, what does it mean? From Always Sunny. Is chat dead on YouTube, by the way, or can I just not see it? It's fine if it's dead. That just means everyone's talking in Discord, but I've got like the YouTube live open in itself, not the I have a very different window than I usually do. My OBS chat isn't working. Yeah, no one said anything? Okay, good. Just want to make sure I'm not missing anyone. That's all I care about. I want people to feel like they're ignored. Where's Flex? Is he still on break or what? He's in prison? Makes sense. You can see the trade that we just talked about play out in real time, by the way, Ty, right? The 54 into 57. Just playing off of like our two areas of liquidity.
call a critical vehicle function.
All right. Euro close here. RTY holding a higher low. Need to see a push relatively soon if buyers are going to be able to make anything out of this. If not, then we've just trapped a decent amount of longs for a continuation down. I really want to see us push over this 58 relatively soon here and test for that 62 again. If we see a strong aggressive seller at 62s on ES, I don't think that we have legs. I think that then this continues down for a structural repair. That'd be my guess. But that doesn't mean that you still can't make a few points on this push back up into here if we do get the pop. But just keep in mind that like 62 is, we really need to see that recovered for any sort of like real upside. Yeah, 43 is a solid level. That's what I have as well. 43 is fine, yeah. Or I'm at the same thing, and then below that we actually have like structure levels that we can play off of. Yeah, this is what I put. So this like 43 to 50 is where your first line of defense, but if 43 goes, then we look for 36, and then ideally you come down to this 26 to 20 area. Oh, I never changed. That's my bad. I just copy and pasted this and then didn't change the text. I might as well just mark this as our short-term pivot. This like gray. I just don't want this to get messy, but it is worth noting. So basically just viewing it like this, right? Hold a value high, push off, trade up into this node that we have above here. And then same goes for this move down. We're either looking for acceptance below or acceptance above, just like we did before. This is VWAP retest for the Russell. Oh wow, you've upgraded, Ratio. Just professional now. A lot's changed in a month. Went from non-professional to semi to now just professional. Huge, man. Gotta be very careful here with this rejection. You don't want to see us lose 54s and that go offer. If that happens, then we'll just look for that push down like I've got drawn with that rejection of 57s. So you don't want this buyer to go off sides, right? This guy who's been defending this 54. Because if that is the case, then we'll probably come down to retest these guys here, right? It just makes sense. Let's actually put a fixed range on this. Yeah. you want to maintain the bid at 54. Or again, like if 54s leave, right, we lose that, then the offer flips here. You can look for a push down, I think. So then it's just a loss of momentum from buy side and a failure. Which is why it's just a range until given otherwise. So here's your reoffer. See if sellers are willing to bring this down, or if buyers can recover and then bid off of it. Did you play the 92 rejection? Yeah, makes sense. ETH low. It's like the same thing idea of the 57 rejection on ES and the RTY VWAP rejection. All of them kind of just working together. Just it's like, yep, that's the top until then. Yeah, the 49. Or do you want lower? 43s? I think 49 is good first risk off on ES. As we need to see the Russell break down. If it just trades in this range, then right, like don't expect much. Need to see that continuation here. So a rejection of this node now. And then you get the push down. That leads to the next leg. But if the Russell holds, then we just get this oscillation, and it's going to be a larger retest back up first before continuation down. So this is where you would want to see the Russell reject if you want lower. This would be a retest. This is like where you want to see sellers on ES with that Russell rejection if it was going to happen, right? Because we can see that Russell is just oscillating in this range, failed to break the lows. But we want to see this node rejection and push down as we retest where these buyers previously were. We want these ES buyers to be offsides on reoffer, right? If this recovers and if the Russell can get back in, then you don't really have a great sign, great like clear directional move, right? Then all of a sudden these guys are offsides, and now we have a potential liquidity to push us out of this range off of the failure to break out, right? Because now you have basically a grab. You now have sellers offsides, which can give ammo for this failed breakout for a squeeze up. Which is why you really want that confluence with the Russell rejecting here and then pushing down, and then a rejection here, and sellers defending this 54 level now. Because if not, then again, like, this is just going to give fuel for us to break out off of this failed move before. So this is where we really want to see if, like, NQ rejects opening range low, and if we reject this 54.55. If we don't, remember, all of a sudden now you have sellers who are off sides, and we've now gotten back into an area where all these buyers were. So just be very careful.
According to a source, OPEC Plus is to hold monitoring meeting on February 1st.
Yeah, and see if the Russell leads here. Again, it's just trading in a box. It got to the top of the box. You now need to see if it'll hold the mid, or this rejects and goes down.
According to a survey, OPEC December crude production little changed at 28.05 million barrels per day.
I know that you guys like to mark lines on things that don't make sense, but just like change the time frame on the Russell and notice that that negative 10,000 changes to something completely irrelevant. So like understand like the pivot's a pivot, but the negative 10,000 itself doesn't matter. Like if you change that to the 15-second, that delta is at negative 3,000. So like what's the thesis? I'm just saying, like, just like if it's a level of like where we've seen change, like sure, but like the number itself is irrelevant. I mean, that's cool, but like if you're talking in chat and it doesn't line up with what's on TradingView, all of a sudden your system doesn't make sense. Like, what's your system? Who are you trading with? All of a sudden you're making shit up. And it doesn't mean that it won't work, but is it working because it's negative 10,000 or because of something else? Right? You always need to keep that in mind. Is it the shape? Is it the wave? Or is there something else going on that's causing what you're thinking is happening? Are you seeing patterns that actually exist? And can you prove it? Or is it something else that you are seeing partially, but aren't getting the full picture and are now creating a narrative around an idea that you invented, right? Just like always keep that in mind. It's the same thing with like ICT, with Elliott wave, with pattern recognition for like basic shapes, right? Like it's like, are you on the right track? Yeah, probably. Are you doing it for the wrong reasons? Yeah, definitely. I'm not like trying to like specifically call out anyone. It's just something that humans do. But it's just like always like use the scientific method, right? When you get into those like ideas, when you're back testing or forward testing, the why does it happen? And if you can't tell me the why, then you really don't have much. Okay, then trade only the negative 10,000 and see if you make money. Like it's a very easy thing. Like if it's that easy, bro, then that's all your system needs to be, and then all of a sudden you're rich. Crazy. Surely that's not accounted for in the market. The person above you, hello? See if Russell holds this low. Doesn't look great. But we are at the bottom of the range that it's been oscillating in. Delta making a new low, though. How do you read the DOM? That is a much bigger question than you think. I would look, it depends on your platform, but I would watch some videos covering it. But left side is buyers, right side is sellers. And depending if you have basically a price ladder or an actual DOM, you will see very different information. So I would look at whatever platform you're using and watch whatever guide that they have on the basic premise of it. Because like the Tradevate DOM is very different than the Quant Tower DOM or the Sierra DOM. Whereas like the TradingView, the Tradevate one is more of like a price ladder rather than an actual DOM. Do you have specific questions, D, or no? Because like I can give you more specific answers if you ask a more specific question, but like that is just such a huge topic that I'm not going to cover on stream. That's like a class that we've already done, which we have like a VOD for the class covering how to trade with the DOM, but like I can't do that now as we're actually trading. You use Tradevate? Well, just you can get decent information from the Tradevate DOM, but like you aren't getting market buys and market sells. All you're seeing is the limit buys and limit sells. Like the actual, that's it. Like there's nothing showing you, and there's nothing other than like a price ladder, right? You can see the pull and stack if you turn it on in your settings. Or there's certain videos you recommend, you know. Yeah. Well, the problem is like all the videos I'll recommend are using like an actual DOM. But what can I recommend to you? Give me a sec. Here's a good overview, but it's of a Sierra charts DOM, so it's going to have a lot more information that you don't have. The problem is I'm not going to be able to find one of Creative 8, but this is a good video that I gave you. That covers an overview. Yusef's good. He's got some good videos. Definitely worth looking at his other content. Yeah, so check that one out. The problem is that it's just going to have a lot more information than you have available to you on Trade8. So it's going to have a bunch of columns that don't make any sense to you. But like honestly, once you have an understanding of like what like the pulling and stacking looks like, and you can witness reversals in real time, so you're going to be doing a lot of replaying, and watching in real time. Like focus on a certain area that you care about. Like we were very interested in this 55 area, and we were really interested in this 50 area on ES. So watch what that looks like on the DOM itself as we trade it. That's really the only practice that really is going to work, is watching areas of interest and then look to see how price moves around there. Something that you can also look into is is available on Trade8 is the footprint chart. It's basically a historical representation of the DOM, so it's showing you where volume was traded from buy side and sell side, and it shows it in blocks, so you can kind of see how reversals happen in real time. Yeah, so I'd look into that. Yusef has a really great video on the footprint as well. But these are like pretty broad topics that are going to take a lot of practice and have a lot of nuance in them. Here's another video. And you look at those and see if it is of interest to you. We've got some private classes. I don't know if you're subscribed or not, but like we've got lessons, like VODs that you can look at that we've gone over this stuff. But those are some public resources I can just show you. If you want more extensive content, covering like the footprint chart or DOM reading or volume profile and market profile, etc., etc., I would really look at Axia. Axia has a ton of free content, and they have a ton of paid content as well, right? But they have a lot of information on their YouTube channel that'll get you started if you actually want to look into it. AXIA, yeah. But I think that between Axia and the one that I just gave you, it's probably a pretty good starting spot. It's really easy to get overwhelmed with this stuff. So just like take it slow and remember that like watching videos isn't going to like actually it's never going to take the place of real back testing and forward testing and doing it yourself and applying. You really don't want to lose this buyer at 50s. This guy goes off sides, then we look for probably that 46, 43 area. Morning, Gav. Russell still not finding a bottom and broke down out of that range. So that's now leading down. Again, you really want 50s to hold. If 50s show as seller acceptance on like a look below, and then we re-offer into it, that's not great. It's great if you're bearish, but if you want the market to reverse anytime soon, not a great sign. But you really want to see sellers get absorbed here. If they pop this below, again, we're looking for this to hold. If this pops below and then on reoffer rejects, we look for a push down into this blue. We want to see this box I just drew become supportive on NQ, or this will be a reoffer for a continuation down. We really want to see buyers step in here. Pop this thing. Need to see that recovery of 60 and then bid off of it on NQ. For ES, you'd really want to see this hold. Again, like you want this higher low to be here off of that 50 test and push. If this gets below, right, then we look for this downside move. Remember, Russell still hasn't found the bottom. It's trying, but we need to see a bit more. Nothing convincing as of yet. This is where we start to look for rebids, see if this little push can hold, if it has any momentum, or if it's just going to get just slapped down again. Remember, we're looking for a recovery of a lower high, and then a rebid off, just any sign of life from buyers. This is our first like real attempt on NQ and on ES on a recovery of the levels that we were just talking about, with Russell trying to bottom, right? Need to see a recovery, a break of the downtrend, at least locally. A recovery of these nodes for a push back up. Me too. I liked the hold of the 58s and our 50 on ES. Just wrist off too though. Into our 64 on NQ. Need to see a push. Need to see the Russell get over the supply here. I liked the push on Delta. I'm really a big fan of these looks below and then recovery. Like this to me is just such a good opportunity. Just wrist off one more. Okay, 2 left. This is our first test of supply here on NQ. That's 76. That fill was bad because I was talking. I didn't have a limit on, but I have 2 left. See what happens here now that we're back to our supply on ES. But this is why I really like these areas to play off of on these holds above, and then the ability to now hold where our seller was. I look for these areas and talk about them a lot, especially when Russell can find lows. I think they're always like worth a shot, but you have to be willing to take a paper cut if we don't see what we want, right? Like we're looking for something very specific, which is buyers willing to hold the level. And like a failure there, then we look for price to come down back to the lows. So you have to be very flexible in those kind of positions. But there's like absolutely no reason not to attempt if you can like manage it. Like there isn't. Absolutely no reason not to try. We're looking for this. We know a seller's here. We need to see that buyers are willing to now hold it. And that seller leaves, then ideally we then push, right? If that seller is no longer present here, then where do we go? Well, we fill structurally back up to retest this guy. And that's our next risk off. Just like logically, right? If this guy's no longer present here, then the next level of interest is going to be up here. And it's the same thing for ES, where this is our next risk off. All we're looking for is a break and show that this seller is no longer present, and then a higher low. We are looking for buyers here at 50s. So we're either looking for absorption, right, from buy side, and then the ability to then hold a higher low, and now all of a sudden we have sellers that are off sides at the lows, and then we can squeeze back up. And then we just look for our seller to then position themselves up at the highs for a pushback down. Like, until then, we don't know where we're going. But we at least can confirm this level and this level. This is POC, and this is the low that we've established. Yes, yeah, exactly, right? Like, it's a very similar logic. And like in the grand scheme of things, we've gone nowhere, right? But like that doesn't mean that you can't make money in nowhere. And like where we are, right? All we're doing. Let's just go to like a 1 minute. We care about this 50. On a look above or a look below, what do we do into it? But more importantly, like for the shorter structure, what do we do on the look back into value, right? Like this is very clear here. This is a re-offer. This is a rebid. Do we see the difference? The look above, right? And the ability to then bid off of that level. At this point, this just stayed offer. Price pushed above but was instantly pushed down, whereas we closed above and then held that. Those are two very different looking positions on the DOM in real time. And like what happens if we recover value? Well, we then shift up, right? We go back up and retest the value high. And now we're trying to hold the mid, right? So now it's just this move. And like until we can break over, right, what we have here is a rejection, a push down, recovery, push up. Now we're at the mid. And now this either rejects down or then holds value high and pops. Diddling the middle. I mean, it just depends on what your risk is, right? It just all depends. Like, there's no. Great job, man. Great job. Now, don't change anything, right? Keep up the same, exactly what you're doing. So like, sauce. Right? If you're playing with this guy and you're thinking that this is potentially a low, then we're looking for this basing. Our risk is this guy's low, right? Technically. If you're looking to play off of this rebid, right, then our risk is here for upside. Sorry, this is reversed. Do you get what I mean? So like it just depends on what your risk is. Are you looking for something instantly? Because like we'll know if we're wrong way before this technical stop. But like ideally, it's just what are we looking for here? Are we looking for value low to hold? Are we looking for a recovery of this buyer? Because to me, I didn't have this up, but I can see this visually without it. What I see here is this is a buyer who is attempting. Extend rate. We have a buyer here who was attempting that then was flipped to our offer, and we got a rejection down. And then we have the same level acting as support where a buyer is attempting again to push up and failing to hold. And so I care about this area a lot because on it look above, I want to see this hold and push up to at least retest these highs. But like all I'm doing is playing off of a look below, a liquidity grab, you could say, and then a push back up and a recovery of a buyer. That's all I care about. But you could also be looking at it from the perspective of a fixed range and then a recovery of value. I'm just trying to show you a different way to look at it and understanding your risk. There's no perfect way, but once we've established a potential low, and right, like we established this area on ES as our potential low, but then we are looking for the Russell to also find the bottom. So as soon as the Russell starts to look like it has potential for a bottom and we actually have momentum on it, and NQ is doing the same thing where we're looking for a bid off of here, all of a sudden we have the three things that we're watching, right, moving together. So our risk profile that we're already placing on ES is there and it's working, but we also have fuel from RTY and NQ. So it makes the trade feel a lot more viable because we have full market participation. So the likelihood of it working goes up tremendously. And it's the same thing for the for NQ, right? It's the same thing. We're looking for the seller to invalidate the top of this node, right? Node. What happened if we just draw this node here? Well, that value switched, right? Which is why we were looking at that area. Yeah. And like if we saw it push below that and then reject down, then you exit the trade. Because what you thought was going to happen didn't happen. I didn't mean to brush you over, man. Congrats on passing your combine. I just wanted to finish my thought. Make sure once you get the certificate that you let Darian know. Oh, he's not even in chat. Does what I'm just like went over though make sense to you guys? I want to make sure like we're on the same page here. Does it compute? Mm. And do we see why I have these two ideas where this is either our high or we look for our rebid? And if we look for a rebid here and we're able to hold 57s now, if this is supportive, then we get this LVN fill here. And we're going to push up to the 62. 62 is incredibly important. If it isn't very clear off of the node that I have drawn, look at what's underneath, right? We have this LVN and we have a fill. So we expect price to push, but we need to get through the seller. If we get through this seller and we can bid here, chop here, and then push off of it, we should get the 62 test. A recovery of this 62 to 67 gives it the breakout. That means that this seller is no longer interested. We want this to become supportive for a push out and a push up to like this area. We care about this area. But like, until then, all we're looking for here now is price to be able to flag here. And then get over. We risk off into this. Yeah, no, right? It's being on the right side of the V. This is just a different way of looking at the same logic train that I put you guys through with the right side of the V. Finding a participant, waiting for the bid off of a higher low, understanding your risk, looking for that seller to invalidate, for the seller to become a buyer, push up to our next seller value. That's it. It's just it's the same logic train. Putting it into practice, though, is a completely different beast, right? I'm out one more here. I have one runner left, break even. Like, I'm not bullshitting you guys. So, like, these are my risks off. So, just so you can see me, like, actually risking off into this position on NQ. Right? Like, these are, like, from 58, right? I'm risking off into our first known seller, into that 63, 62 area. I'm then seeing that we're able to hold. I'm then looking for the next level, which is into that 70s. And then we just sold again into that 85 because we know that this is the high. We need to see the Russell be able to break this. And so I risk off one more. And now I just leave a runner. And that's that. And like, if we can then bid up here, awesome. Huge. I can then re-add to that position. But like, my initial take profits are very small. But if we leave a runner, all of a sudden I'm able to make from $50 to $500 on that contract. No problem. Great. So like we know same logic as what we were just talking about. We know a seller is going to want to try to defend against this buy level. We know. This is an easy risk off. We don't want these buyers to get back on side, like on the right side, right? Because what they're going to be looking for is for a push off of that and then to bid here. If these buyers are like actually valued again, right, where the seller's been loading and this is now our buy side, then we get a push up to our next level, right, which is what value high in the day, this node. So you're going to see sellers try here aggressively, and if they're off sides, all of a sudden we get momentum and we get a full retrace back up. But like it's an easy first risk off. All we did was traverse from the lows back up to the highs of this range. And like, it's nothing new. We've had it marked. And we know that as long as like this 57 area can stay bid, that then there's potential to go to for 62s. Three-leg goose. I think it's time-based. You just put in the time. I haven't used three-leg goose in so long. Let me look. I think it's just a plug and play. You literally set the time yourself. Maybe I'm wrong. Maybe that's only on the dev version. Yeah, so like, here, I'm gonna just use Aram's chart that he just posted. Why does this area matter? And just even the larger scheme of things, why do we care? Like, what is happening here? This is a divergence from this selling down thing that's happening, and these lower highs that are being made, and the channel that's been put in. Why does this area have significance, this 58 that we were talking about, 58.60? Other than it being a retest of POC and the high, and then a break and hold of value of this low. Well, it's a recovery of our sell, right? And a buyer stepping in for a push back up. And then it's the right side of the V that we talk about over and over again. We have a seller pushing price down, right? All of a sudden we see buyers willing to hold where our high is and then push off. Now we have an area that we can play off of.
According to CoinDesk, Goldman eyes Bitcoin ETF roll via BlackRock and Grayscale.
This recovery is huge. And what do we care about even more from that low? If you don't look at the DOM, if you don't look at volume, if you don't look at any of these things, what's important here from things that we've talked about before about potentially spotting and being on the right side of the V? What's this? Off of a higher low. Yeah, it's a break of downtrend, but what is happening at this yellow box that I just posted? Why does it matter? What's the difference between that candle and the candles that happened before it? Yeah, but like, it's aggressive buyers sweeping, right, out of that after higher lows and a retest and then a push. And then an aggressive bounce, right? An aggressive push back to our seller. And then from that push, right, creating an imbalance, sweeping the book, right, pushing us out, we then see buyers holding where our seller should be positioned. And then we see sellers bidding and holding there. So now you have a shift, right? That's a much more interesting and aggressive buyer than was previously there. So even if you're just looking at candles, right, you now have an area to play off of where you're willing to put risk on. This isn't new information. This is the same thing. Does anyone have a diagram of... Let me see if I can find it. Yeah, well, I don't know what to tell you, bud. Does anyone have the right side of the V drawings that I did from a previous class? I don't know if I have them on this PC. I'm sure someone here has them. Thank you, Sauce. Yeah, that one's okay. There were some ones before that when we were going over AV-WAP lows with the FEG bottom from before without even a volume profile. And we can talk about it again though, but what you want to see from a position like this, that's sell side. Aggressive push down, rebid, and then a push out. And ideally, from this low, we should be able to drop an anchored VWAP from this low, and then watch this position be defended from that AVWAP. And ideally, we see a buyer create an imbalance in the direction that we want price to move. The best trade that we can possibly take is looking for a higher low defense in our AVWAP and an imbalance that was created on the way up. And we look to bid and play off of that for upside. For like your initial risk on, if you were trying to find like the lowest potential entry without waiting for a recovery of, say, like this level, if you can find a buyer and play off of them and then play with them defending that low and looking for liquidity in that imbalance that was created, this is your first potential entry. If not, we have to wait for this seller to no longer show interest, right? That's here. And for this to then become our buyer value, that shift, and then push out, which is that 58 to 60 area on NQ. But like, you can get a much better entry looking for even just the first attempt of that buyer and then playing with them. Does that make sense? I mean, this isn't new, but like, I just it's just a nice little mini lesson of something that we've like gone over in depth. One left. We look for VWAP here, 610. I don't know, man. So I think Sauce asked about just like the understanding of what we were looking for, and then that got carried out and did a different direction as usual. We're at our 62 target on ES. This is your first real risk off. You need to see this 62 become supportive. Seg just felt like talking. Dude, I'd rather be muted. Well, let's see what happens. To talk more? Holy. We're back to this seller on RTY. We want to see 62s become supportive, and then a push and a look above 67s and hold. Or this is just going to chop rear and then see if a seller loads again. If we lose momentum here, right, into our target on NQ, and we lose momentum at POC into this 2002 on the Russell, right? Why do we think ES is going to continue? What would be the reasoning? If we're at resistance on NQ and RTY, what keeps ES afloat? So it's our risk off until we see that they want to hold and keep going, right? So now we're looking for higher lows from our objective target. Now we're just looking to see if price can continue and push. We want to see acceptance back over these levels. You can leave a runner for it, or you can wait for a re-entry. I don't care, but just understand where we are. We want to see momentum continue on RTY and NQ here. And if you bought that 58 to 60 area, contracts are now $1,000 per. And I am out. I will look to see if 67s can hold, but this is our next target. We want to see price now build the 62 to 67, push above, and then hold 67s for support. But we are back to VWAP and POC on NQ and on the Russell. Solid trade, back to our mean. Now we look to see if we can then hold the upper side. So now you're looking for this. So we got our rejection at 67s. We are at our 2002 target, right, on the Russell. We are trying to base up here. We are trying to hold 62s now on ES and flag. I want to see a push over 67 and hold, show acceptance up at the highs, or this is going to just kind of chop around here and then come back down, right? Like, we want to see buyers active. We don't want a loss of momentum up here. We want to see continuation and the willingness to continue the bid, right? Just know where we are, understand that this was our target, and if you are looking for more, you might not get it, right? We just need to watch now. Look for the higher low, make sure that RTY and NQ are willing to both hold these highs and that delta continues to show strength. If that is the case, then we should be able to see higher prices. But we need to see a recovery of these levels and a show of support. You mean other than the seller that we rejected at right now? And before? We care about this area just because it's our previous buyer low. So we want to see this become supportive again for a pushback up. This is where our previous buyer was. And we saw that the last time we recovered the 67 on a look below. We've seen this happen multiple times at this area. If you believe the market has memory, do we see how this zone has been supportive, and we've seen a lot of buyer value on the recovery of this level for a push up on these attempts? Yeah, no, I get that. I don't mean to like come off across like poorly. Like, it's just like this has been an area, like I'm just dragging this over. You see how this has been an area of value on a recovery back into it? This red box. Yeah, so like oops. So all of a sudden we have a node to play off of, where like we've seen this in the past multiple times on a look below. Like, we need this buyer to show themselves again. Same again here. We need to see a recovery, push, and then pop. Until then, we expect sellers to defend where previous buyers were. It's just how it goes. That's how you get lower highs. Right? It's the shift of the auction. Buyer value is now seller value. Just think about it like that. Support becomes resistance. Whatever word you want to use, it's the same thing. So if buyers were here and this was our support, right, double bottom, we now expect sellers to be here. So we want to see a push above and then a bid off of this to show that buyers are willing again at this price. If we get that, then we should be able to at least push up to retest this node edge. Sometimes it doesn't need to be crazy, right? Like, it's a value shift. Hopefully that helped. Yeah, but I mean, just like very, like, it just simple double bottom, right? We now need to see this become supportive again. The recovery of value, it would be a break and hold of value high for the day if you're looking at a daily profile. So like, this is our node, right? Break and hold. Push out. Alright, I feel like I showed you like 5 different ways. So that should be good. Thank you for asking questions. I'm sure you're not the only one that is wondering. I do wish that you asked them before we got to 67. So I've mentioned that level like 20 times now today, but I'm glad that you asked it at all. Okay, no problem. It also is just like it came in. Do you see how we like came and retested our POCs, the dynamic ones, on the Russell and on NQ at the exact same time that we came up into that 67 level? Just like as an added little bit of confidence that we might be onto something there.
Shortly expecting results from the Fed reverse repo facility. $79 counterparties take $719.897 billion at the Fed reverse repo operation.
Russell coming up into VWAP here. Important in this retest. Remember, this is the top of that range that we were oscillating in before. You just actually make it a solid line and not a crayon drawing. Oops. We've rejected here multiple times. See if this marks the top again. Need to push above that if we want to get anywhere. We have news coming out in a second.
Block via Twitter say that Nasdaq are to meet with the SEC today to discuss spot Bitcoin ETFs, according to a source again cited by the.
I'm so sick of crypto. Dude, I don't know. My crypto portfolio now consists of just like BTC. That's it. I have. There's no reason now that we're trading futures. It's the same stuff, except it actually like isn't completely manipulated. It was fun trading like 500 leverage though. When I was super active in the TFC crypto channel, were you guys around then?
On the financial news feed for anyone interested.
That was it. That was peak.
Indicated in the article, no time frame is given either on a potential decision by the SEC.
Straight shooter. James. Yeah, his Sam Beard trade was so weird. That was so random. Like the most illiquid options chain. Sam Adams. It was like that and what, Tesla. He's from Canada. Alright, this is where we really need to see buyers show their hand. Russell showing some weakness, but we're still maintaining higher lows. We don't want to see the Russell lose either the equal low or the higher low, or you start to run into issues. We're at POC and VWAP at area on ES, right? This is that 62 that we kept talking about. We want to see buyers ideally hold here. We want to see Russell continue to maintain these like higher or equal lows. Same with NQ. But we are seeing some weakness, especially with NQ here. You really want to see this area hold, the VWAP support test. If not, then I don't see why we don't just come back down to like 56. Right, like in my mind, sorry. Like I'm only interested in basically trying to play with this guy. What is going on? Back into this for a pop. Right, push back and play off of this area. Or I want to see this 62 hold as the low pop and then go for continuation on an opening range high retest. Yeah, that's really it. Yeah, I think it's definitely possible. I mean, the Russell looks fine, which is usually the only thing that I care about for continuation on these moves. NQ definitely a bit weaker, but in the grand scheme of things, I'm not too worried about it yet. I think we could probably come back down to 80s. But like, if you actually scroll out a bit, right, like we're just holding this previous edge as of right now. So like ideally we hold opening range low, but like it's fine that it's just chopping here. I don't really want to see it go much lower than this though, with ideally us holding this 86. But just like it's fine as of right now. But if like this weakness continues and the Russell starts to show weakness, then you have an issue. So like we need to really watch this VWAP test and on RTY as we come in. If NQ continues to persist, then that's when like all of a sudden you get elevator down, right? Because then we've lost momentum. Because we know that NQ is weak, but the only reason ES is continuing to hold this range is because the Russell is still pushing it. We lose both, right? We lose all momentum. We've gone over that quite a bit. But it's always good to reaffirm. I will be right back. I need to grab water. I'm losing my voice. Yeah, I mean, there's no short until you see the Russell weakness and a rejection of 62s. Man, what are you shorting with us at VWAP? Right? Like, you need to see a rejection and push below from VWAP. Right now, it'd be like a very speculative short. Because what you need to see is a push below this and then a rejection down, right? Until then, like, you have a pretty small area, the risk here. Like, what, you're shorting into our supportive VWAP and POC that we're holding? Like, what's the play? You're basically shorting into buyer value. Like, yeah, we're seeing some weakness, but the potential to get completely squeezed here is just tremendous. There'll be another opportunity. Right, that retest and that look below will give you all of the confirmation you need. Like, if you want to play the bet that this is the top, then just buy an option, right? Just buy a put here. Give yourself some space with limited risk. I wouldn't be betting my life on it with futures. Way too easy to get punished. Like, personally, for me, we push dramatically in either direction from here. So you could put on a pretty safe like strangle here. Like, we're gonna deviate away from VWAP. We're not just gonna hold this for the rest of the day. We're going to get a drastic move in either direction. So if you're impatient, right, and you can't wait for that push and rejection or the push and rebid, like, that is always an option. I personally closed my log quite some time ago. I'm just chilling. Did any of you guys watch Rebel Moon? Or are you waiting for the Snyder cut? Or do you not have any clue what I'm talking about? That's always the third option. No? No one? This is where you want to see buyers try to defend 88. Just like we have drawn on NQ from that low. You watched it, Caleb? Did you like it? Yeah. Well, there's another version coming out that has an extra hour. Hopefully soon. I'm waiting for that one. This is an important area. This is the Russell retesting that double bottom. Remember, what we were looking for here is either the low to hold, right? Or a higher low. So this is about as far down as I'd want to see us go. I don't want to see us really dip much further than this, or looks bad. Nah, you'd want to see a bounce here, Sauce. Like, this is it. I'd like to see us hold the previous basing, if anything. Look for a liquidity grab here and then a pop. If it fails, right? It is what it is. This is why I said, like, you get a drastic move away from view up in either direction. You don't want to be on the wrong side of this trade. Ain't no way we're just holding here. Nicely done, man. Yeah, I think that was good, Caleb. Especially with us kind of coming back up to our mean and then seeing weakness, right? It's that loss of momentum that I was talking about that's like super key. If we don't have that strength in the rest of the market, then we should expect at least a bit of selling. It's just the buyers aren't present anymore. We've lost the, you know, all of the aggressive participants. They're back up to where they're now risking off. Like, it just makes sense. Like, if what's going to keep us up? What's going to push us? We should at least get a move back down to here. I think that this is probably a good first risk off with really coming down to this 56 makes a lot more sense, but well, we'll see. This is what we were talking about. Need to see this now hold as supportive. We've now filled the structure, right? So if we're going to hold a higher low, you'd want to see this basically like 56, 57 now hold as supportive. Yeah, Sauce. So like the idea here, I was just talking about this, but like think about these two nodes. How do we get it to become one node? Well, we want this to show as supportive here, right? We want this structure to hold, and then this will then create a single distribution. So what we're looking for now that we filled this and now we're retesting is you want to see this pop back above and then hold that 62, right? We're still looking for the same trade above. or you're looking for a push below this for a move down. Does that make sense? You're looking for these buyers to still be relevant. Here. We want them to be here. If they're no longer here, we look for them to be resistance, and then we look to traverse back down to fill this structure, and then we play off this imbalance fill and the edge of this node. And with that, that will hold and fill this in, right? Yeah, exactly, right? Like there's no, and until then, like we don't have a great direction. All we can do is play off of that we know a buyer's here and we know a seller's here. And so we're playing these two nodes. We're risking off into this, we're putting risk on into this, or you're waiting for risk, for buyers to show that they care about over this edge. Or like if you're just following my chart, the blue zone to blue zone. Yeah. And you probably won't get much more until your minutes come out, right? Like we're just chopping around VWAP. Which again is why I was like, just throw a two-way option play on it. You're gonna probably make money in both directions. Like we will get a strong move away from this VWAP eventually. Someone's gonna be wrong positionally, like on either side, and they'll get squeezed. We're not just gonna sit here forever, but you will get these deviations away. If the Russell can't get back over 2001, then we probably continue down. But as of right now, nothing's really changed. It depends on how long do you think we're going to chop. You're going to get wrecked on both of those if we just chop for, another hour. It won't matter between the two. So if it's just a lotto, then you might as well, I think, go for 0. Because I don't think 1 DTE is going to change. But if you want a little bit more, I would say 1 DTE is just better overall. But I think that no matter what, you'd get wrecked if we're stagnant for more than an hour. It just really depends on how far out of the money you went. Directionally longer term options. I haven't been for a bit, but that's usually how I play. I've just had my long-term port. Yeah, no, I do. What I'm saying is that I don't think 0 DT or 1 day to expiry is going to matter if it does chop. So like regardless, my whole point was that you should be expecting a larger move after news comes out. And until then, like, you don't really have a great idea positionally or directionally of where we're going to go. So I wouldn't want to have futures open with a position like this, or in an area like this. So if I was going to be a degen about it, I would want to do it with options because I would have very limited risk. That was my point. But like, they're going to be worthless if we don't get the expected move that I'd be looking for. But yeah, I haven't really done longer dated, like, directional stuff in a bit. Options just haven't been interesting to me. I don't know why. There's just been no need. Yeah, maybe. I don't know, as soon as I started to like take futures a bit more seriously, just options, like, I just lost all interest. And I just have been basically just hands off on my port. But I think we could probably get into some longer dated option stuff again. But they won't be single legs, they'll be multi-leg stuff, which most people don't have accounts for. Yeah, I'm a big fan of spreads, man. I just don't know if people are going to be happy with the returns on spreads anymore after playing with futures. It's just really hard for me to keep track. You guys have to like keep in mind that it's really either or for me. I can't keep track of the overall market and then also manage individual positions. Like, it's just impossible. It's too much. That option spot caused so much stress, and actually feel like 0 people utilized it. It was just like so much stress and time for like nothing to come from it other than people seeing my win rate. I know people want that, but I honestly, like, I really do think that what we're doing now is just such a better direction. I mean, you guys are even seeing it, like, new people are joining and they're like now getting funded within, I don't know, it seems like the first month of them being here, which is just, you love to see it. I'd much rather you have that than like, here's an alert. Like, no, you just got funded on your own and now you have the ability to trade someone else's money basically risk-free, and you did it by yourself, right? Like, you have a skill now. Yeah, like, you got funded within a month. Huge, man. Like, that's it. That's the dream. In our Discord, Caleb. Sorry, that's... You're not seeing the rest of everyone else chatting. This is a conversation we've had a couple times before, but like the mentality shift once you actually get funded is huge. You put a lot more added pressure on yourself, or you all of a sudden think you're like hot shit, and you don't realize what your edge was, right? You mistake a lot of things that you were doing, or you got lucky, right? And you're on like an Apex account where you got funded in a day and then took like $25 trades for the rest of it. And like you don't actually have real edge. And it's going to be a wake-up call if you get funded for the first time and then you lose it. And a lot of people, it's super discouraging, but like if you're journaling and you're doing all the things that you need to do,
10 minutes time
right?
now,
Like
at the top
it
of
will
the
be
hour,
a
you see the release of the FOMC
really
15 minutes before the
solid
December meeting.
like wake-up call, and it will be good for you, because then it's like, oh shit, like my edge was just listening to Sig. I didn't actually know why I was taking the trade. And like if that's the case, you better continue doing what got you funded, right? Until you can figure it out for yourself. If you start to like make your own trades and I'm not on, and your edge was listening to me and that was it, and you still don't know why you're taking trades, like don't all of a sudden think that you know what you're doing, right? I think for a lot of people that's the case. And then there are others that just like got lucky, right? They traded a rate decision and they got the big pop, and then
analysts note that the minutes are of particular interest for investors because the December meeting
I'll let
was
this guy
a key
talk.
catalyst for the sharp rally in treasuries after Fed Chair Powell said that policymakers had discussed
Morning, Izzy.
interest rate cuts. And so some further analyst commentary notes that traders will want to focus on just how cursory or intense the discussion was about cutting the policy rates. This is according to a futures strategist, Wisman, who wrote in a note. Also says that although Powell hinted at a robust discussion around cutting rates on December 13th, the Fed speakers have since warned that rate cuts are not imminent. So again, just some of the focal points ahead of this meeting minutes release.
I think Garoto is a great example of what I'm just talking about. It's where like he would do extraordinarily well on the days that I was live, and then he would try to trade his account when I wasn't live and didn't have the perspective or the commentary, right? And it's not like I'm like giving out trades. I mean, like if you're actually listening, I am, in the sense of like where I'm looking and what we're looking for and the pathing and whatnot. But like it's not as obvious, right? And you still need to be making your own decisions and whatnot. But like, if you aren't following my same train of thought on my days off and applying yourself and applying what we're teaching, you're going to have a really bad time when you go over and shift, and then you start panicking when things like aren't working. But that goes for anything, right? It's the same thing. That's why we're trying to like teach you our train of thought and how to deal with that, like the mental hurdle of like all of the added pressure that you're putting on yourself once you go to a live account. That what you just said is so key, and I see it over and over again. Second time getting funded, first time all I did was play off ADR low and ADR high, but once I got funded last time, I was impatient with entries and not waiting for what got me funded in the first place, and I lost the account within a week. Yep. Like, you got to stick to what got you there. That's what I meant when it was like hot shit. Like, all of a sudden you aren't using the strategies that made you the money. You get cocky. Man, there's nothing wrong with wanting commentary or wanting another opinion or just like wanting to be in a community. I mean, I think that's what the beauty of Discord and like with the YouTube streams as well. It's like, even if you are taking your own trades and you have your own ideas, hearing from someone that you respect or a community of people who you have been trading with for a while, like, even if you're successful, I think is amazing, right? Like, that's what you want. You want secondary opinions. I don't think there's anything wrong with that. I mean, think about like what happens on an actual floor. Like, you're not just alone. So create that same environment for yourself, and then all of a sudden you're going to have quite a bit more edge than if you were just trading alone, making poor decisions by yourself with no accountability. Allow the Discord, allow your community to be your accountability partner, and you're going to grow quite a bit more than if you were by yourself.
So in 5 minutes time now, at the top of the hour, we see the release of the FOMC meeting minutes for the December meeting.
But that accountability thing is only valid if you're being true to yourself, right? You're not putting out an image. You're being real. You're being honest. You're willing to grow and willing to be vulnerable. A lot of people still are not. It's going to be very hard to grow without that vulnerability. If you are just starting trading today or you're just tuning in, we have news coming out in 3 minutes, so be careful in your position. FOMC minutes coming out at 2 Eastern. I am flat. the way that I'm looking about this area, just to give a recap before news comes out, is if you're bullish, you want this 57 to like 60 area to basically hold, right? We want to see this node now show as supportive, right? We want to see these buyers that were sellers, right? This flip becomes supportive on a retest for a push up.
1 minute remaining.
That is what we want to see.
Meeting minutes.
If we push below, we then can probably trade back down to value low, down at 52. That's basically it, right? This is it. So we're looking for buyers to be able to maintain this with this news coming out, this 57 to 60 area. We want to see a push and hold. And then we want to find buyer participation. If this does hold, right, and this does flag, we want to see a push and then a hold of this node and acceptance above this 67. 67 is value high on the day. We want to see acceptance outside of value and a push above. Or this is just the top, right? So just to give an understanding. We want to see buyers here.
Observed progress on inflation.
Just wait.
Been uneven across components, but noted core services prices still rising at an elevated pace. A few participants suggested the FOMC could face a trade-off between the dual mandate goals in the period ahead. Those participants pointed to downside risks to the economy associated with an overly restrictive stance. A number of participants highlighted uncertainty around how long restrictive policy would need to be maintained. FOMC members generally viewed the addition of the word any to comments on possible additional firming as relaying their judgment that rates were likely at or near the peak in this cycle. Again, participants viewed policy rate as likely at or near its peak. Says they saw upside risks to inflation as having diminished. Several participants suggested it would be appropriate to begin discussing technical factors about slowing balance sheet runoff as well. Again, so Fed Minutes note, several participants suggested it would be appropriate to begin discussing technical factors about slowing balance sheet runoff well before a decision was reached. Participants generally reaffirming that it would be appropriate for policy to remain restrictive until inflation was clearly moving down sustainably, and participants generally stressed importance of maintaining a careful and data-dependent approach. Several participants observed the circumstances might warrant keeping a policy rate at current levels longer than they had currently expected, and participants noted, however, the outlooks were associated with unusually elevated uncertainty. So in the projections, almost all participants indicate their baseline implied a lower federal funds rate would be appropriate by the end of this year. Several participants noted the decline in use of the overnight reverse repo facility and saw this as reflecting portfolio shifts by money market funds. Fed Minutes say that staff economic outlook was broadly similar to the projection prepared for the previous meeting. So again, to some of those key points there, officials acknowledged projections showing cuts by the end of 2024, saw policy remaining restrictive for some time. Officials saw policy rate likely at or near the peak and said that rate cuts could stay at the peak longer than anticipated. So again, to some of the key comments from those meeting minutes. So on the back of this, just noted some whipsawing in the S&P 500, overall unchanged from the release. The dollar seeing some slight upward pressure following this.
What, reading? He's good at reading? True. I'll delete this previous trade. I don't know how to read, so it's impressive. Makes sense.
So it does appear that the link for the FOMC meeting minutes is not working on the Federal Reserve website. As soon as this is sorted on their side, we'll get that out for you.
I am in no position, Robert, but I would be risking off shorts into 52, 53 area as your first risk off, as we have drawn here. If you did short, we're basically just trading between these two nodes. So now you're at value low. This is where you want to see if sellers actually can push us below and hold, or if we just find buyers here again.
So as markets digest the minutes, just seeing the dollar continuing its strength. Dixie's up 1 spot, 4% now. S&P extending declines, down 0.8% now. So again, some of the more hawkish comments, as several said in the minutes, that the rate could stay at the peak longer than anticipated.
And if you are, again, just tuning in and you weren't here from earlier, until we see 50s become resistant, this is the low. And for a continuation, you need to see a push below 43s. Or this just is kind of below. It is what it is. Let news be digested. We are currently just trading in between these two areas. For buy side, you want to see a recovery of this 57-59 area. Or it's just going to be a rejection of this node for a pushback down. We've technically gone nowhere, which is what we were expecting. Just retest of our highs, right? A pullback from news of like short-term value. And then we just tested our high seller value, buyer value on both sides. Screwed both sides over. And now we can get direction. I personally will never trade stuff like this. I'll wait for things to settle and then play it off. But I do think stuff like that is fine to play with options. Because you know you're going to get a dramatic move in either direction, and you can probably make money in both contracts, honestly. Yeah. I don't know. I just don't want to be positioned like that with futures. Too much leverage. So you would love to see buyers be able to hold this 57 now. Right, this is that look above and now bid off this node. You want to see a push over 62s and then the ability to hold there, or that'll be your seller. There's your 62. That was a rejection of Globex low on NQ and on ES. We want to see a push above that and acceptance over, or that will continue to mark where our sellers are located.
according to the White House, the US will continue to maintain significant force presence in the Middle East. So just be aware, Wall Street Journal's Tim Morales has put out an article on the Fed minutes, noting it suggests hikes are over, but offers no timetable on the cuts, and again highlights that some officials showed risks or highlighted risks of an overly restrictive stance of interest rates. So again, we have just provided this on the feed for anybody interested.
long now. I mean, no, I've given the range. You should be trying off 50s or trying off 62s. There's just nothing here. It's a literal coin flip here. And there's potential for continuation, but you need both NQ and the Russell to show lows, or it's just going to continue the trend down. Right now you have lower highs being put in consecutively, right? We need to see a break of these lower highs and then a return and push back over these sellers. Right now you have a seller in control who's pushing price down. Have a good rest of the week, Cass. I'm sure the time off will be really nice. Everyone deserves a break. I can't imagine trying to run a restaurant during holiday season. It sounds terrible. Back to our 62. Need to see the Russell break this downtrend. We are back to the top of our range. So if you are long from 50s, this is your first real risk off. Again, until we see a break and hold over 67s, I will be considering this kind of the high. For the next pathing up, we want to see 67s become supportive. Ideally, find acceptance right where our previous sellers were. 67 being the top from our previous. Right, we have a buyer that was positioned here. We have a seller. We have a seller. We have a seller. So we want to see this become supportive here at the 67 if you want more upside. Above that, we then looked at this area where we have a double POC, right? Two areas. This 70 to 72 is where we expect sell side to be positioned. Until we see acceptance over that, this is where your next move of stops will be. Above that, you look for this.
Some of the gains that it saw from the minutes still up 1.1%, while the S&P 500 is pairing some of those losses, so still down 0.4%. We're just seeing some upside momentum now. Again, dollar seeing some downside moves.
All we are looking for now is acceptance up at these highs. You just saw a bunch of sellers get punished, right? Big push up. Now we want to see this build here, ideally. This is still news play, so just be very careful. What we want to see is sellers not sell us off again at Russell VWAP. What is this candle called? What candle? Going to delete this pathing just because it's a little stretched for what we're looking at, and just draw it out like that. We want price to be able to hold here and just kind of build out this area, show it as supportive. Again, it's the 67 that I care about. Failure to hold 67s, then we come back down to 64.
NYMEX
So,
natural gas February futures settle at
really want that to hold.
$2.67. Diesel February futures $2.60. Gasoline February futures $2.16.
For more upside, you want to see a push over 73s and then a bit off of that, and then you can probably play it up to 78s, just as we have drawn.
NYMEX WTI crude February futures settle at $72.70 a barrel.
The way that I'm looking at it
$2.32 or 3.3%.
is if these sellers are no longer interested here, these two fixed ranges, the POC to POC, which is what I have drawn here. If we can find value here on buy side and hold that, then I don't see a reason why we wouldn't transact or traverse back up to here, right? Just to where this seller is positioned. It just doesn't really make sense for it to not occur. I could see an argument that maybe we reject here, but like overall, just kind of coming back up to this guy makes more sense if this becomes supportive. But we'll see. It's all about trying to find buyers to now hold this high. We want the sellers that were positioned here to now be gone, and we want to now see this POC from the shift down now show a support on this retest up. That is the most important thing here. So just pay attention to see if the bid is willing to hold value high, right? At the end of the day, that's all that matters. Can we now hold value high on a push out of it on a look above? What happens if we fail to hold value high on a look above, and then we now see a seller stepping in here? What's the pathing on a failure to break? So if we look back into value and then reject, we look to transact back down to value low. So we really want to see buyers show their hand here and the willingness to defend value high and find acceptance above, or we are going to be looking for a shift back down to the lows. So these are the two areas that you need to be watching. They look back into POC, the recovery of value high, that to become supportive for a push out, or the look from POC, and then the rejection of value high on a look back in, right? And then a continuation down. These two are what we're watching. 1 and 4. So this is POC, this is value high. So as long as price is able to hold here, what we're watching for now is the rejection at this value high at 67.50. If price fails to push back above, right, then you get to run into scenario one. If price is able to push back over value high, and then we bid off of that, then we can look for continuation up. Do we see it playing out in real time? So this is your POC retest. You want to see buyers defend this. Failure to do so, then we'll look for a full pushback down to value low.
The US dollar index now pairing gains in the wake of the Fed minutes, last up 0.2% at 143.27.
So we need to see a push over this 67.50 here. That's your value high. We have now retested our POC. We've bounced off of it. We don't want to see sellers positioned here now that we've looked below. We want to see a push above this and then the ability to hold for continuation out.
Brent futures settle at $78.25 a barrel, which is up $2.36 or 3.11%.
I think you just basically want to see buyers continue to defend the 62 for like the next 3 minutes. Need to see Russell actually be able to break POC view up. It's just continuously been the sell signal. Still making higher lows though. I don't think anything's really changed. We're testing view up POC on NQ right now. But so far a pretty clearly defined range between 62s and 71s. I don't think you should really like shift bias until you see 62 become our offer. I think it's fine to risk off into 71s until we see that become supportive above, but like to be like actually bearish, I think you need to see 62 become res. Like look at the I think the 10-minute shows it very well candlestick wise with the 3 bar holding our node and POC. If you needed like a actual representation like this, right? We just retested the imbalance in POC, we bounced, and now we're just trying to find acceptance at value high. And if we can build here, right, then we will get a push. We just need to see if buyers can hold and if it'll be enough to get us out, right? Like that's it. So I'm very curious to see if this like 3 bar will play. But so far it's doing the thing, right? Holding POC, holding where we've wanted to see value be found, right? Now I just want to see acceptance at 67s. Acceptance at 67s gives us a push. Until then, this is it. Yeah, I mean, you just are in a range. Very clear low and high with our wicks. So we risk on and risk off in here. Or you wait for acceptance below or acceptance above these wick highs or wick lows. Just depends on what kind of trade you're taking. But we've had the 71 marked and we've had the 62 marked. So it's like either wait for a break and acceptance above those or trade the edges. Or don't do anything. I don't care. I need a nap. Oof. You started playing Baldur's Gate 3. What's up with you guys playing games after we stopped playing them? Mario started playing it as well, and he has like 200 hours in the game all of a sudden. You guys gonna get into Warframe once we stop playing that? What's going on? Yeah, it's super fun. Oh, okay. Xbox. Is it funky on controller? Can't even imagine trying to play a game like that on controller. I'm glad you like it though. It's so good. Oh, really? You can just move without... That's interesting. I mean, Elden Ring is probably like one of the best games ever made. So it's definitely worth if you like that kind of game. It's the difficulty curve on Souls games though are it's pretty rough if you're not used to that kind of. Elden Ring is really hard, but very rewarding. If you want a more casual experience, I'd play Baldur's Gate. But both of those games are like very decisive. Like you're either gonna love them or hate them. Like they're both games that are nothing like anything else you've played. In both like very different ways. Yeah. I would look on YouTube of someone playing Elden Ring and see if you want that pain in your life. Ugh. Enough of that right now. Yep. All right. This is it, guys. This is your 62 test. It's now or never. We want to see the Russell find a bottom here into this imbalance fill. Need the Russell to bottom for the 62 to hold. Dark Souls 1. Whew. It's a clunky game. That one, the difficulty curve is just because, like, mechanically, it's so clunky. That's like half the battle with those earlier ones. Really? Okay, that's good. I just remember the UI being so bad. And, like, nothing is explained, right? A classic. But, like, that plus a terrible UI, and then, like, clunky iframing. Yeah, and just, yes. But yeah, both of those games have gotten Game of the Year, so not terrible picks to get back into something. You really want to see the Russell find the bottom here. This is your fill. If not, I really think that we just come back down to value low on ES. Russell's such a good leading signal, man. If you're short, 56 is your first risk off. Just remember that this is your POC shift where we had buyers, right? That's all we're playing off of here. You need to see a push below 56 for a test back down into 52, which is where value low is. It's 53 area, sorry. We just had a shift to value. But just like keep in mind that this is just where buyers were previously located, so you should expect a little bit of a bounce here. Oh, there you go. That first image is exactly what I drew before with the FEG. And then the secondary buy with the recovery of our sell level. There's your full traverse back down to value low here, off of the failure to break, rejection, push down. I don't know if I'm going to take another trade today. I really don't. But this is what we were looking for, either one of these, 1 or 4. We saw a failure at POC to hold, which gave us a push down to value low, off of a rejection of value high. So we saw price try to build here, failed to break over, rejected, and then pushed down. We're now going for that value low. From here, it can either continue to oscillate, right, between value low and value high, or we can get this look below, right, where price builds below POC, fails, and then pushes down, or gets the look below value, rejects value, and then continues down, right? So now you're looking for one of these 3, right? These were our first options, 1 and 4, and now we're watching to see if value low holds. If we break below value low, right, what happens on the reoffer? That's it. Those are it. Those are your options. If we continue to build and hold below POC, then we see that sellers have shifted, right, from value high down to POC, and they're now building there, and so we should be looking for further movement to the downside. That's what this represents in 5, right? So just keep that in mind. Just want to be risking off into value low until we see acceptance below it. If we see that rejection on the look below and then the push back in, then you can look for more. Or 67. Let me go look at SPY itself. I don't really look at SPY. All that matters is this. It's the same thing. Go look at SPY. And SPY is just going to be the ES chart. $67. I think 67 is a good target if these lows show as resistance, right? But I think you've got a bit of room to go. But you need to see basically the 69 become resistance for a push down, right? And then we can come down for a push down into demand here. 67 being your demand edge. But like if 67 doesn't hold, right, then you have a full structure repair for this gap down to 64.50. So you'd have to really see this show as resistance, this edge here, and this buyer to be offsides. Because right now you have to kind of respect that this is where buyer demand is, right? So we need to see a look below this, and then our seller to show that they are now here instead, right? Support becomes resistance. If that happens, then we can look for that 67, I think, definitely. But it seems a bit premature as of right now. But definitely playing this oscillation makes sense. Now we just have to see a push below. Yeah, no, I think your reasoning's totally fine. Just definitely watch as we come down into those lows so you don't get screwed. But I mean, nothing is supporting like that we're going to go up, right? We have a seller in control. They've been in control. We saw a bounce and we saw a rejection of previous supply right at this gap. We had a failure to push above. Let me turn off everything. Right, we had a failure at the gap to hold it on a look above, and now we're coming back down to the lows. So unless we see some like really initiative buying down at this 69 level, I think that your target makes sense. Right, because we haven't broken the lower highs. But what we do need to see is a lower low, because right now we have higher lows. So this is your value low test here on ES. We've now done the full move. So now this is where we'll be looking to see, does price hold here, right, and transition back up to POC? Or do we push below value low here and then find acceptance on a retest that, do sellers then hold value low as resistance for continuation down? That's the key here. Is this the low, right? And do we bounce for at least a mean reversion back up to POC? Or on a push below value low, are we able to then hold it for continuation down? So in my mind, you have two options here. We want to see price either hold, right, and basically bear flag here, or a push down. And what we need to see is a push below 50s, and then for that to then show as resistance. We know that there's a strong buyer who's willing to buy at this 50. We've seen it time and time again. And so we need to be aware of this level. Below, if 50 does become resistance on a push down, we can then target this 43. But until we see anything below this 43, I expect this to be our low. I would need to see a drastic sell, and then for this to become resistance for that continuation down, and then we can look for 36. But like until then, just like keep in mind we're going to be battling for the value area low here. Is what we've been talking about. And like if on a push above and then the ability to hold, we then start to see this, we can get a full push back up to 62s. So what would give us what we needed for that pushback into value? Well, we would need the Russell to show a bottom, and we would need to see NQ show a bottom. If those things could happen, then there's really no reason to think that we are going to continue down, at least short term, right? If the Russell finds a bottom, and that was the cause of the sell, and we've lost momentum on the sell, don't be an idiot, right? So like we're looking for the Russell to find a higher low and show that it wants to put in that bottom, at least for now. And that will give us the momentum we need for a push back up. Just like we saw at the top, if we lose momentum from the buy side, right, what happened? We sold. So if we lose momentum on the sell side, what happens? So just watch RTY and NQ. Can we break these lower highs? Can we recover a selling level and make it into a buying level? If the answer is yes, then we're most likely looking for more upside. If we fail, then we look for the reoffer and then we look for continuation down. Yeah, I think that's smart. Like until then, it's just there's clearly a seller in control, and we know exactly what's happening. We need the Russell to find that bottom. And until then, there's no reason to expect anything else. But we want to be prepared, right? But we have targets below and we have a target above with a set of parameters for both.
So we're looking now to the early market on close imbalance, currently sitting at 815 million to the buy side.
$50 buyer still very present. Russell finding that low. Our real test will be at 56. If we can find acceptance back above it, then I fully expect us to come up to 62. It just is what it is. I cannot reiterate enough that these are just simple market profile rotations. We have gone over and I discussed with you before they happened on the push down and the push back up. If we find 56 as our rebid, again, I think that you go back up to 62. But this is now your test. Right back to our seller here. Yeah, man. Good job. Yep. Great job, guys. And now we just look to see if we get continuation with runners. I can't reiterate enough, like, understanding that the Russell was the leading signal for the sell, and then the loss of selling momentum on the Russell led to the low into our buyer value on ES. It's just like, okay, well, like, what do you think is going to happen? We're going to at least get a push up that gives you a few points, right? And this gives 6. And now we just look for a higher low. And if that can happen, then you get continuation. If the Russell loses momentum, if NQ loses momentum, we expect ES to lose momentum. And vice versa. You wait for one of those to bottom. We wait to see those divergences start to build on NQ and RTY. They give you your leading signal. We look for a supportive level on ES to play off of. We take the chance. Yeah. Yeah, it's not any sign, right? It's very specific. And like we talked about understanding on the shift back into value, what we'd be looking for, a failure for sellers to hold below value low, understanding that Russell and NQ needed the momentum again for upside on ES, right? Like it's combining multiple things. But like once you have that knowledge, all of a sudden it creates the variables you need to know if it's worth, right? Doesn't have the reward or the risk. And does it make sense probability wise to take the play? If it meets your criteria, you know, just you got to go for it. Yeah, it might be a minute. Need Russell and NQ to show lows. Need buyers to really step up here if they want to give that final retest back up to 62. This is where you'd like really want to see sellers defend.
So looking again to the early market on close imbalance, still sitting at 815 million to the buy side.
And like Jesus just put a really great indication as well, is you got the triple buy signal. ES, NQ, RTY, all in the 1 minute at that low. The triple. It's all about understanding, like, if they all seem to be showing momentum. But you really do need to see this push over 56 if you want more. Do you see how POC just shifted here on ES? It's an important level. You need to change that. 56. Man, I need a nap. I need to stop doing these full days, man. They're so exhausting. Too much talking. My problems on days like this is like, if I'm not in a trade, then I just find it as like a great opportunity to teach or to like talk about concepts. So it's like, okay, well, we got the trade and now let's just go over stuff. Yeah, definitely. I mean, it was definitely by the book, but I need to just be willing to mute and just not ramble. Like, we did the trade, we did the thing. It is what it is. I need to have that mentality. Or by, like, Thursday, my voice is just gone. At least this is a short week. How much time do we have left? 17 minutes. No, I don't want you to think I was yelling at you, man. Ugh. Well, my whole point, Aaron, is like, I think that there is something there in the sense of like, on average, right, we're going to have a certain amount of volume or a certain amount of a move, right? We can do similar stuff on Vold, where like we are going to get a decent, like an average high and low, right? And there's definitely a level where that is persistent, right? Like with this, where like it can definitely be a key pivot, but is it the level itself, or is it something that we can look at and then mark a pivot on our chart systematically, right? Like in the moment, rather than like define it at a certain level. That was my whole point, is like, depending on what the environment is, you don't want to be dependent on a signal like that, or like a certain number. You can easily though find what the average is based off of the, you know, the previous week, right? And kind of get a good mix. That's why I like ADR a lot, is that it's the average range, right? And it might be something worth looking into to put onto something like Delta, right? If we can figure out the calculation for it, because then it would give us an approximation of like what the move has been for the week. I think that could be something that could be really useful. I just don't like it when we assign arbitrary things, even if other people are using it. Like the reason why we can do it with tick is because it's literally an oscillator, right? Like it doesn't have, there's a set number. And so it works a lot better with something that's defined like that. That's all I was trying to get at. But like, I think like CJ had brought this up. I wasn't a big fan of the way that he was using it at the time, but I think that there's merit to it with Volt, where there's only a set amount of volume, right? And we can define what kind of market environment we're in by how much, like what this looks like, right? We have days that are high, right? And then we have days that are pretty balanced. And we can kind of get a feel for where we are in the extremes or in the mean. And we can really get a feel for that. Be like, look, like it has like some pretty defined extremes. And so then we can find like the days that are kind of the median, and then we can find that zero. And we can get a feel for like when the selling is kind of at a point where it's like, yo, this is kind of usually where we stop, right? Or this is kind of where we usually stop buying or selling on this kind of day. And I think that there could be a lot of value there. And I like that. And I took that from CJ. But I don't like defining it at a certain level itself, right? Like I want to find out what our average has been. This to me, based off of like the last couple of months, is telling me like, okay, we have a known area of when selling should kind of cease. And when we get down to that area, I want to be risking off because I know that we're going to have potentially an upside day off of that, right? Just like with any sort of overbought or oversold indicator, we're going to have an extreme. And so if we can find that kind of like point, I think it's relative to what's happening in the market and in the environment that we're currently in. But that's it. That's all I was trying to get at. Yeah. So I think it's good for like the larger term and like the more what's a good way to put this? I don't know if there's a lot of edge for short-term trading, but I think it's good for potential areas where we could reverse for larger moves. But I don't know if it's actionable for, you know, your 1 minute trade. I don't have to back test it. But I think it could give you a good narrative, you know, like another tool in your arsenal of like letting you know of like when you should be risked on or risked off in a short or a long position, right? Like I think that there's value in that for sure. And that's how we use like Trin, right? That's the same concept. And it's the same way that we look at like our put the call. Just like where are people positioned and when are we going to get at a point where too many people are positioned on one side? And we look for that reversion. Yeah, of course, they're always going to be contextual, and you have to understand what kind of market environment we're in, because things are going to completely shift based off of that.
So looking now to the market on close imbalance, 2.5 billion to the sell side.
And that's why it's not
imbalance for the
a
2.5 billion to sell.
Plug and play all around, just turn on the algo, dummy, and buy at that level, right? It doesn't work in every environment. So understanding that it's a variable and understanding the environment that it works 90% of the time in, or even 60% of the time in, is key, right? Understanding we're at our 43, by the way. This is target. look to see if buyers will hold here. If we fail at 43s, we look for 38s, but 43s is a nice area. But it's just all, it's understanding contextually what makes that area work, right? It's like, you don't want to get caught up at a certain pattern or a certain level and not understand what kind of environment it works best in, right? It's like when we were in an incredible bull market, right? And all of these trading patterns were working all the time, and people were developing like this false sense of security that they knew what they were doing. And then the market shifted, right? The environment shifted, and they got screwed because they had no clue what they were doing, because they had developed these truths, right? This ethos of trading, and then it completely just shifted on them. And that's when you need to like really define the environment that your strategies work in. And that's why we backtest in multiple environments and understand what we're trading in and what a balanced market looks like and what a market in motion looks like, because they trade very differently and you have to approach them very differently. But like, as soon as you do that and you have strategies for both, right? Like, then you're a killer. But yeah, everything is contextual. That's why it's so hard to be a retail algo trader, is because you don't have the capabilities to have that kind of back testing or that kind of data input. You just have like indicators, and you have, very basic news data, whereas like these larger firms have so many variables being plugged in and being accounted for in real time for market environment and risk and, et cetera, et cetera. And so like, it's really key to be testing things in different environments. That's why what like Tom's doing is really great, is because he's back testing for in large time increments and finding when things work, right? And that's why he has that spreadsheet where he goes through and it's like, oh, this works in this kind of environment, this works in this kind of environment, and then like you're turning on that algo in that environment, and you're turning off another one when it doesn't work well. Like, you have to know your instrument, right? You have to know what you're trading. Sorry, little rant. But I think that's something that a lot of people miss. And it's a huge wake-up call for a lot of people. Like, I know a couple professional traders that have developed their own like algorithms off of order flow, and like the conditions when they have their bots on are so specific. It's not like an always on kind of thing, and if you're doing that, you're doing it wrong. Like, there are environments where these things work incredibly well, and there are environments where they don't work at all. And you need to be able to determine when that is, just like for your own trading. Like, are you better? What kind of environment are you better in? Understand where you have edge. It's the same thing. Yeah, and that's the hardest part, is what's actionable and what's real, right? Because it's like what I was talking about earlier. You don't know, if you can't explain to me why something is happening, or if you are just like, that's the market makers are doing it, right? Like, this is just the way it is. Like, to me, that's just garbage. Like, it's like the same thing with ICT, where he's like, it's the ghost in the machine. Like, shut up. Like, if you can't like explain at least the basic mechanics and create a narrative around it, and then show me in real time, like, you're talking baloney. Like, maybe some of your concepts work, right? But they're working for a completely different reason than the narrative that you've given it. Which is, like, it's, you know, whatever makes you money, but, like, don't lead people astray and say that you've, like, figured it out when you have no clue what you're talking about, and you got lucky because you found, like, order flow imbalances, and you've now relabeled them and trademarked them as something else. But, like, if you don't understand why, like, imbalances are created, or, like, what that looks like in volume, right? Like, just because it works, like FBGs, right? Like, we've explained it in that sense, but it's also, we talk about it as imbalances, and we've showed it in footprint charts, and we've showed it in volume profiles, right? We've showed you 9 different ways of why something is the way it is, right? And then why to look at it and how to look at it. Like, you need to be able to do this, like, semi-scientifically. Or how are you going to know when something is real or not, right? Humans are way too ready to see patterns in things that don't exist. So understanding when things are real and when they're not is a skill in itself. Yeah, and I'm sure that I am incredibly cringe to some order flow traders, right? But, like, it is what it is. Like, a lot of order flow traders, if they saw that I was trading off of a candle chart with a DOM, they'd be like, hey, what are you doing? Candles. But, like, if you understand the general ideas, and we understand what's going on behind the scenes, and we're actually still watching, right, order flow, and we're watching the DOM, and we have a volume profile, and we have a market profile, and we're still using the same resources, there's no reason not to visualize it in a way that is more appealing to you. But we understand what's going on behind the scenes, right? Like, nothing's changed. It's just like, how do you visually, what works for you? But, like, if you're just trading off of, like, candlestick patterns, you're gonna have a bad time with no, like, relevancy to volume. Yep. So you got your celery offer here at this 49. We need to see a push above that if you want any sort of continuation. 43 was nice, but we need to see the Russell hold this low here. They want the hold of the higher low and a push over 80s, or this means nothing. Remember, if NQ fails to hold this low, if Russell fails to hold this low, it's going to be very hard for ES to not continue to sell here. So we really want to see some buyers try to hold this higher low at 46s. Getting some volatility into close, so just be very careful. It is 4 o'clock. If you're in positions or if you're trying to hold overnight, I don't know if we're low enough for this to matter. I think we might need one more leg down. I would have ideally liked to seen a push up to POC at close for me to be more comfortable. I think we might need to either retest 62s or come down further, just like before I get off for the day. Just give like context where we are. We need to see, we're kind of in the middle of nowhere, right? So you need to either see a price build here, right, and then push below and then reject. You delete this just to give you an idea, because I'm not going to be here tomorrow with you. So I want you guys to be prepared. So depending on what happens tonight, I either want to see a push back up. This is your main level of concern. If we do push back up, is this 62 area where our ETH low is. The more recent level now is going to be this value area low to 56. This 53 to 56 is your new area, and where you kind of need to be watching for short-term sellers. Big boy sellers. Right, what we're looking for is for acceptance below this 43, and what we're eventually targeting is a push down into this. Until we see a push below this 43 and kind of this reoffer, there's not much here. We're just kind of looking to either get back above this 50 or a look and hold below 43s. Let me go to a 30-minute. Turn off all this nonsense. The reason why I care about this this level here is 43 is basically just a double bottom, right? So it makes some sense to hold here, but what we want to see are these buyers off sides and for sellers to find value here instead, right? We want this buyer value to switch to seller value. So this blue box to become resistance. If that happens, there's a high probability that we will come down to this 26. Why do we care about this 26? Well, this is the first area where we saw a higher low being put in, right? Right here. A little bit of contention and a volume. So this is the only area that we have to work with at a higher value other than the gap fill. Does that make sense? So we are watching this 26 area because this is the last line of defense right here at this node. After this, if we break below this 26 and that becomes resistance, you look for a full fill down to 700 basically. That's just a full structure repair of the zone. So that's kind of the key. These are your levels. This is full structure repair. So again, if 43s become resistance, watch for slight bounces at 36, and then for 43 to kind of show its hand as I'm going to just redo this. With, I'm going to stop trying to draw with the pen tool, and we're just going to do it how we should have done it in the first place. What you're looking for is a push below, and then the hold of this 43, right? We want to see what happens at this 26. 26 will either offer as a low, or you look for the look below, and then the push down. We fully expect this to then be a full structure repair. These are kind of your pivots, where we watch for the reoffer and the push below. We know that there is a seller short-term positioned at this 53 to 56. And so we need to recover that for any sort of real upside. This node here, 56 being very important for upside. For downside and continuation, you look for a push down into 36 and then a bounce. And then wherever that bounce is, if we still maintain lower highs, right, we then get continuation down. I'm just going to call it seller defense instead of line in the sand so that you know what I'm talking about. Okay, I'm just gonna post this for you guys. I will not be around tomorrow. I'm just clarifying that. So I just want you guys to at least have levels to play around. But there you go. You guys have a good night. I will see you all Friday. Any questions before I go, or are we good? Yeah, there's really not much here, right? Like you're just at, look at this, think of it like this, right? You guys like it when I draw the same node over. Sometimes it helps with your visualization. So you need to see acceptance at the low edge of this, right? We need to see this then become our offer for a push down. Until then, you need to be ready for this 50 to be recovered, and then understand that 56 is the POC of this node, right? This is your pivot. So if we can build here, right, in this upper area, then we can try to attempt the highs. But if you think about it like this, that this is the range and this is the mid, maybe that'll help you with your visualization. I know it helps me, so hopefully it does something similar for you. All right. Good night. Goodbye. Later, Mark. Great job, Caleb. Those should probably be good. I think you're on the right track. Again, like with that SPY, right? We were looking at that 69 you want to hold for resistance. That's what we were talking about. So this is your retest here, what it's doing now off of that move. So you really want to see this area now hold, right? We want these buyers to be offsides. And if that happens, you then look for that 67.80. And if that becomes your offer again, right, then we get that full gap fill down to 67. Okay, I'm now going to get off. You guys have a good one. I will see you Friday at like 9:30, 10, just in the morning, Eastern, for open. Have a good night.